When I started doing trust and estate work 30 plus years ago, people left money in trust for their kids because they either wanted to control from the grave or they didn't trust their kids. In the last 30 years, there's been several major societal changes why the idea of putting money in trust even for adult children makes sense. First issue, 50% plus divorce rate. Concept is, your child is getting married. They're the ones who have assets because you're no longer here. They want to buy a house, so they take $100,000 of that and they put it in a down payment of the house. Well, they've just made a gift of $50,000 to their future former spouse. Okay, so how do we deal with that if it's in a trust? Well, the trustee says, you can have the money, but you and your husband or wife are going to sign a note to the trust. Therefore, if the house gets sold in a divorce, trust gets paid back with interest. Second issue is creditor protection. We all know about liability suits. We all don't know what kind of businesses our kids are in, if they're going to become a brain surgeon where they have high malpractice, or they're going to be a real estate developer where they have to sign personal guarantees. If you're going to leave your children money, wouldn't it be nice to put it into a vehicle that if the deal went south, they're not going to lose their inheritance? Another issue along the same lines is, it's a new concept. It's 300 years old. It's what the Rothschilds did. This trust becomes a family bank. If your child wants to start a business, they borrow from the family bank. If their deal works, they're paying themselves interest. If the deal doesn't work, then the trust is a secured creditor and at least has a chance of a partial return of its money because it is a secured creditor. I also call this a family harmony provision. The reason I call it that is, would you all agree that between spouses, dealing with financial issues can sometimes be very difficult? Okay, so your son-in-law or daughter-in-law says to your child, honey, you know, you got this money from Dad. I've always wanted to start a t-shirt business. Their ability to say no is somewhat compromised. Would we agree? Instead, if the son or daughter-in-law, son or daughter says, honey, great idea. Go see the trustee, and if he approves the business plan, I'm perfectly fine with it. Meanwhile, while he or she is driving over, he calls up and says, NFW. So you are putting in, and understand, your children will be the trust committee. They have the ability to hire and fire the trustee. However, the trustee must be an attorney, a CPA, a financial planner, or a bank, and it can't be one who's related to them. So they can't name their wife, who's an attorney, as the trustee. So basically, and I'll continue on with some of, they've given up direct control because it's in the trust, but they have almost complete indirect control because they can hire and fire the trustee at any time. Another point.
Stuart?
Yeah.
So if I've got this trust, do all these things have to be baked in there? Or
So they're not all baked in.
Smart enough to know to use them?
Well, let's put it this way. It's a combination. Some of it is going to be baked in, like substance abuse issues. I bake into my trust.
Yeah, I have to say that. I have to correct that.
Yes.
It's not already in there.
No, it may not or may not. But the issue is that there are certain things that I don't want to necessarily mandate. Like, I have a client that big believer in education, but his comment was, I don't want the trust to pay 100% of education cost up front. I want the trust to pay 50% and 50% on graduation. Now, if I put that in the trust, I'm locked with it. However, what I ask clients to do is draft what's called a letter of wishes. A trustee, when he is making distributions from a trust, the standard is the beneficiary's reasonable health, education, and support. The letter of wishes says, what does that mean to me as the settlor, as the person who created the trust? You know, example also is I have clients that they have 3 sons. They love 3 of them equally, and they have one that they wouldn't trust to save their lives with money. Now, you don't want to necessarily put that in an irrevocable trust where everyone's going to see. But you could put in the letter of wishes that if Johnny and Jim come to you with a plan, look it over, make sure. If Joe comes to you with a plan, I want you to go through the business plan with a fine-tooth comb. So the letter of wishes sort of gives that guidance to the trustee of, you know, I have one client that says on the birth of every grandchild, I want $10,000 put into a 529 plan from the trust. You can do various things along that level. So also, but what is addressed in the trust is the idea of substance abuse and trust fund babies. My documents provide that if the trustee suspects there is a substance abuse problem, he can mandate testing. He can also cut off support if he doesn't go into rehab, and it can authorize the payment of rehab. It also can provide that the trustee says, this trust was set up as a supplement to your income, not your sole support. So if you think you're going to sit at home all day and watch TV, watch soap operas, not happening, because I have the authority, as the trustee, I have the authority to stop making distributions.
So how do you do that proof of income?
Again, that could be in the letter of wishes. Sometimes it's the client says, you know, I don't care if they're working for the Peace Corps and making no money. I just want them doing something. Some say, I want a matching. I'll give a distribution. Whatever they make in income, I'll match it. So there are ways you could play with that a little bit. Okay, another societal point. How many of you would agree the nuclear family is not what it was? Okay, so if you have multiple children, it's quite likely one of your children is not going to produce heirs. So the question for you is then, if they don't produce heirs, do you want them to decide if it goes to the ASPCA, or do you want to mandate that if they don't use the money, it goes back to your other kids? I pick pet charities because I do seminars on charities for pets. Other point is, if God forbid a child becomes disabled and would otherwise qualify for government assistance, SSI, Medicare, etc., this becomes automatically a special needs trust, which means it is not counted for purposes of qualification for SSI, and you do not have to spend it down for them to qualify for the government assistance. So the idea, and obviously there's some tax planning that can be done with shifting assets, etc., between family members, business loans within the family bank, etc.